Silver's highs in the past decades has been $50 and $50. We're trading at 32, 30, 32 area right now. So copper's above the highs since 2011, gold's above the highs since 2011, but silver's not. Well, either silver's a dog or it's got a lot of catching up to do. And we technically argue that's what's underway. The biggest move now on a percentage basis going forward, while gold is the mama, it's leading the pack, silver is going to have the greatest percentage upside.
Expectations for precious metals are soaring, with MichaelOliver from MSA predicting that gold will surpass recent highs and potentially exceed $2,500. On the other hand, silver is expected to outperform gold on a percentage basis, possibly returning to its previous high of around $50. Silver and other metals have experienced significant price increases this year. According to Saxo Bank's latest market report, silver has gained more than 25% since the beginning of 2024. This performance has positioned silver as one of the top-performing major commodities, outpacing gold. Oliver notes that both price and momentum indicators suggest the market is accelerating, which could lead to rapid and substantial price increases. He describes gold as a leading indicator that anticipates macroeconomic events rather than merely reacting to them. Veteran financial analyst Peter Schiff also forecasts a continued surge in silver prices this year, potentially outpacing gold. Schiff argues that the surge in silver prices indicates rising inflation, making silver a better indicator of inflation than gold. He suggests that the Federal Reserve must take more action to curb the rising prices of daily essentials. Oliver emphasizes the importance of long-term metrics for assessing future price movements, indicating a bullish outlook on precious metals. Investors are advised to hold their positions to capitalize on the expected rapid gains driven by these new market dynamics and technical indicators. Gold prices may also benefit from U.S.-China trade tensions and rising seasonal demand in India. Additionally, the subcontinent's solar build-out is expected to boost silver demand, according to precious metals analysts at Herias. Join us as we delve into MichaelOliver's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
The dynamics that people measure markets by, especially the gold market, the gold miners, and silver, is based on what they've experienced over the last 3.5 years. Remember when gold got up to, in the summer of 2020, they all made peaks. Okay, silver was 30, gold miners, GADX was 45, and gold was 2,070. Okay, then we went into this 3-year boring range for gold. The maximum high to low was 20%. Most of it was about 15%. And silver and the miners staircase downward while gold went sideways. But everybody who's measuring the technicals now, like RSI or MACD or whatever they're looking at, or Bollinger Bands, they're using the last 3 years of technical reality as their norm. And it's time for them to throw those out the window because the norm has been broken. We're creating new dynamics, new parameters. Your notion of overbought that was prevalent for the last 3 years, throw it out the window, okay? We think we're about to enter a phase where the lid's coming off, and not just in price, but in technical measurements. I think what we're about to see here, copper's part of this too right now. I've just sent out a report on that yesterday, looking at long-term price, but also long-term momentum. And it's now entering a point on momentum and price where it's saying, hey, I'm about to accelerate. Was this slovenly sort of upward biased action of the last 10, 12 years in copper and in gold? Remember, we're 1900 plus back in 2011. So, it's not like we've really exceeded that by a lot. The angle of ascent is being accelerated above. It's evident on price, and it's also evident on momentum, which validates price, or pre-validated it actually, which tells us that you're about to go vertical. And by vertical, I mean dimensions that people aren't used to. Like silver's recently had $1.50 days, within a couple hours. It's a new dynamic. Okay. But its upside, gold is right now approaching the 2,500 level. Now, I think there's some major brokerage firms that came out with a target, like 6 months ago. Gold will go to 2,500. Okay, so you can bet there's a whole bunch of people think, look, place to take profits. Okay. We've done some work, intense work, using some long-term metrics Now, gold recently got above 2450. Okay, we're like 2430 right now as we speak. It's just sitting here congesting for the last few days. You get this beast, the gold market. Now, it's the mama, so we got to watch it, even though it's not the best place to be. Silver will be. But there's some numbers we've got in the upper, starting from the lower 2500s, like 25, 28 to give you one number. I won't give them all to you because we tell our subscribers the specific numbers. But let's put it this way, about 3 to 5% above the highs we've just made. And you need to sit back, smack yourself in the face and say, don't take profits. Everybody's eager to take profits. That's all I'm hearing is take your profits. As soon as you take them, you miss it, okay? You get up into that zone and you can see gold move hundreds of dollars rapidly. And you can see silver move. I'm not going to predict where it's going to go, but in relation to gold, it's going to beat it on a percentage basis. And it wouldn't shock me that silver's back at its old highs, the $50 level. Again, gold's at all-time highs. Copper's at all-time highs, in fact, new highs. Why shouldn't silver be? Well, the spread argues that's where we're headed. We're headed back to blast out the all-time highs. The acceleration phase is about to begin. And if you get up into that zone on gold that I roughly defined, it's saying, watch out, put your seatbelt on, don't even think about taking profits. I'm gonna go up vertically and dramatically. Now, I suspect that's going to be associated with some other events in some other markets, or soon be followed. Let me put it that way. Gold is a leader. It doesn't follow markets. People don't understand that. They think, oh, it's data sensitive. No, it's not. It anticipates macro events. It's been around 3,000 years after all. It's not, with the Fed's been around 100. Okay, so, which has maturity?
MichaelOliver, a noted market analyst, highlights a significant development in the commodities market. Copper, after an initial surge and a period of sideways movement, has recently broken out, indicating the onset of a new upward wave. This breakout positions copper as a strong performer alongside gold and silver. Both gold and copper have surpassed their previous highs from 2011, with copper recently exceeding its 2022 peak. Silver has emerged as the standout asset in the metals sector, outperforming gold by a notable margin. Year to date, gold prices have risen by 17.54%, while silver has surged by an impressive 35%. Copper has also delivered stellar returns, with a 28% increase year to date, making it one of the top-performing commodities. Despite silver's strong performance, Oliver points out that it remains undervalued compared to gold and copper, trading below its historical high of $50. This undervaluation suggests that silver has substantial potential for further gains, possibly offering the most significant percentage increase among the metals moving forward. On Monday, silver prices reached an 11-year high, driven by economic data that bolstered expectations for the U.S. Federal Reserve to cut interest rates. Recent inflation data has contributed to the bullish outlook for silver, as traders eagerly await further guidance from the Fed's upcoming policy meeting minutes. Let's get back to the interview.
I think we've begun probably the most major move in the monetary metals they've ever seen. Okay. I think the events of the last, multiple decades have compiled. We have these continual, boom bust cycles in the money, and we had in the stock market, in commodities, et cetera. But finally, I think we've reached a point where excess has gone beyond prior excess. I'm talking right now of the paper asset bubble. It was created between, the 2009 low in the stock market and current highs, which basically are marginally above where they were in 2022. And you can look at an M2 chart. You can look at a Fed funds chart. You can understand, no wonder we had a bubble. They exploded the money supply. They gave money away for free out of the last dozen years. 10 of those years, it was effectively free. So, you had a bubble. Okay. Well, the problem is when bubbles break, stock market and some related markets, it's very bloody. It's very painful. And not just to people that own stocks, but to everyday guys, and families. And remember 2008 and 9, you didn't have to be an owner of the stock market to get creamed. It hurt really bad personally. Well, this time it's going to be worse. And no, the stock market hasn't broken down yet. We think it's topping. We think it's been topping since 2022. Only now is it marginally single-digit percents above that high. And we think when that goes, the whole crescendo begins in a more obvious way. But gold is a very smart market. And, it's the mama, okay? We got to look at gold before we consider silver and even copper. Now, you mentioned copper, though. It's very interesting. The Bloomberg Commodity Index has been going down since the war in Ukraine and Russia began. Basically, it peaked about a month after that war began. So the excuse that, commodities went up because the war is baloney. They started up in late 2020. Well, copper was part of that. Okay, it wasn't moving with gold. Copper wasn't moving with gold at that time, nor was the Bloomberg Commodity Index. In fact, gold had already peaked in the summer of 2020 before commodities started their surge. They pulled back since then, commodities did, so did copper, and nested for the last year or so, basically. After having the correction, they just sort of went sideways. Most commodities, grains, crude oil, copper, etc. And we had a breakout a month or so ago in the Bloomberg on long-term momentum metrics that said, okay, the next wave is beginning on the upside. And copper is definitely one of the leaders in that category. And I think this time around, commodities and copper will follow gold, which, as we know, is blasted into new highs as well. So is copper. Copper made a peak back in 2011 at 460, made a peak in 2022 at 502, and now we're up there, 530 or something. So, it's done just like gold. Made a peak in 2011, a peak in 2020, and now it's zoomed past both those prior highs. Silver, meanwhile, yes, on a percentage basis, is gaining a lot more than gold has in the last few months. And we're just catching up finally. But when you look at its undervaluation to commodities and to gold, it's still very undervalued. Silver's highs in the past decades has been $50 and $50. We're trading at 32 area right now. So, copper's above the highs since 2011. Gold's above the highs since 2011, but silver's not. Well, either silver's a dog or it's got a lot of catching up to do. And we technically argue that's what's underway. The biggest move now on a percentage basis going forward, while gold is the mama, it's leading the pack, silver is going to have the greatest percentage upside.
Considering the recent economic data and inflation trends, how might interest rate adjustments by the Federal Reserve influence investor behavior in the commodities market, particularly for gold and silver? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.